Oklahoma State Extension livestock marketing specialist Derrell Peel is our cattle market analyst this week. U.S. beef and veal exports in June were down less than 0.5% from a year ago. Japan was by far the largest buyer, taking almost 31% of this country's total shipments. The USDA will release numbers next week on meat prices for the month of July and cattle on feed estimates. We talked with Derrell Wednesday morning at the Nebraska Grazing Conference in Kearney. We started by discussing how the U.S. beef industry, including land use and overall inventory, has changed over the last 10 years.
Agriculture in the U.S. has been through a tremendous amount of dynamics in the last decade. Obviously, we've seen unprecedented just about everything. So, unprecedented, and it started really when the ethanol boom took off in 2007, late 2006. We saw those dramatic changes in corn prices. That led changes in all other crop prices, basically, because it's all tied together. And part of what I was talking about this morning was that cattle industry, as a user of forage, not only uses the permanent forage, if you will, the rangeland resources that we have largely in the western half of the country, but a lot of cropland or potential cropland that has been used at pasture, can be used as pasture, as well as other forage type crops that we grow on cropland. And so anything that changes crop agriculture in this country is going to have an impact on cattle, because it's going to change the market incentives and the economics of those forage resources that can vary.
The last time we talked in spring, we were talking about the expansion, and we also mentioned then that we wouldn't have a July cattle inventory. Do you have a better handle on where the stopping point is for expansion and how far along the process cattle producers are?
Well, we don't really have much data because we didn't get our mid-year report, but at the same time, I've changed my views a little bit here in the last few months, and I think there's some anecdotal indications that because we've had such a dramatic adjustment in feeder cattle prices in the first half of 2016, coming off of a big adjustment in the last part of 2015, I think it's possible that we're putting the brakes on a little quicker than I would have said just 3 or 4 months ago. So we're clearly expanding, I think pretty clearly expanding in 2016. That was going to happen in any event. I think the real question is going into 2017, depending on how much expansion we have in 2016, then how much more, if any, expansion we might see in 2017. And at this point, I think it's possible that we could be mostly done by the end of 2016. I'm not ready to completely say that, or at least not with a lot of confidence. I think it's still probably likely we see some expansion in 2017, but it might be pretty minimal, again, as we appear to have put the brakes on a little bit quicker in terms of herd expansion.
Give me your analysis of what's happening to cattle markets and what has happened so far this summer.
Well, we're still reeling a lot from everything that's happened in the last 12 months on the backside of this thing. Of course, everything we've seen in the last 12 months was really the backside of an unprecedented thing that happened in the 2 years prior to that in terms of the run-up in prices. And what's important about where we are today is that all of that's behind us. I think the real important message for producers is that all of that stuff, whether it was good for you or bad for you or some of both at various times, it's done with now. We're kind of rebalanced. We've got feeder cattle prices, which is a constellation of prices, but across the board we've generally got them back in line sort of with each other, and more importantly with fed cattle prices. We've kind of got box beef and everything kind of back in line, so there's no real need for any sort of major adjustments. Again, we've got herd expansion happening, some inertia there that's going to play out here over the next year or two. But in total, I think we can look for a lot more stability. We've got lower prices, but given where we are going forward, those prices will work, I think, more for all sectors than they have in recent months.
More stability, but do you still see a downward trend as we go forward?
I think it's likely because we are in an increasing supply scenario. Certainly there will be more supply pressure. So the real answer to the question then is what happens on the demand side. And there's reason to be pretty optimistic there. When we went through the short supplies and record high prices, what we saw that we didn't know would happen or weren't confident would happen was that beef prices did take that very well. Beef demand stayed strong through high prices when some people weren't buying beef, but we didn't have as much beef. The real challenge coming forward is as prices come down, do those folks that got priced out of the market come back into the market? At this point in time, that's pretty encouraging from a domestic market standpoint. The other thing that will be important, of course, is the trade side, and that's also one that appears to be slowly but improving. So that if we have that domestic plus international demand base, then that moderates the supply pressure, and it means that we could see limited but probably still some erosion of prices over the next couple of years.
You are anticipating that beef prices will come down in the store then?
They have begun to come down quite slowly, sometimes to the frustration of producers. They think they ought to come down faster. I keep reminding them that we really don't want beef to adjust that fast in the market. And they, retailers are making a lot of money. Well, that's good because that means they're going to want to sell more beef. And so, that's a good thing, really. And so as those, there's lots of meats out there. Beef is increasing for the first time in several years. We've got lots of pork and poultry, and yet beef prices are holding up well. I'd say that's all a good sign for the beef industry. We will see erosion in those retail prices, but as long as it's a moderate kind of erosion, that's a good sign.
One foreign thing to note, the U.S. and Brazil have announced they'll loosen their restrictions on beef trade. Tell me how big of a deal that is.
From the standpoint of the market impacts, allowing fresh and frozen beef from Brazil for the first time in quite a number of years is really not going to be a major impact on the market. We've continued to import, even when that market was closed to the fresh and frozen beef, we've continued to import cooked product and processed product from Brazil. People forget that we have a beef import law in this country. There's tariff rate quotas set. Some countries have a specific quota, the major importers, Australia, New Zealand, Argentina, and so on. Brazil does not have a country-specific quota. So there's an other category that's less than 10% of the total imports allowed. Brazil will fight for a share of that less than 10% unallocated component. Nicaragua and some other countries fill about 2/3 of that now. So when you get through all of that, what it means is that realistically Brazil has a limited access to the market. They will have to earn that market share. They're going to have to outcompete somebody for that to be much bigger than that. More fresh and frozen may offset or may substitute for some of the cooked product that's coming in now, so there might not be as much net increase. It's not clear how much of that will happen, but very, very much clearly, Brazilian product will compete against Australian and New Zealand product as processing beef. So again, there's probably some substitution going to take place there. So the net effect is, at least in the short run, not a big deal.